Good afternoon. My name is Dustin Dupas, Chief Operating Officer at Tabs Analytics. Welcome to the 10th Annual Tabs Analytics VMS webinar. We'll be covering important consumer, channel, and product trends across the VMS category, covering 18 product types, such as multivitamins, probiotics, joint relief, women's supplements, and more. Our next webinar will be the second Metrics and Analytics webinar for 2017, which we've titled Awful Analytics, 10 ways that analysts are misrepresenting market data, and 10 easy ways to fix it. Be sure to join us for this presentation on Wednesday, August 16th at 2 p.m. Eastern Time. Please check back at our website at tabsanalytics.com next week for the analytics sign up. Presenting today is Dr. Kurt Jetta, CEO and founder of Tabs Analytics. At the end of the presentation, we're going to open the floor to questions that you could submit via the chat box on the GoToWebinar screen. With that, I'll turn it over to Dr. Jetta.
Thank you, Dustin, and thank you to all those that have signed up for the webinar and all those of you that have attended. Just as an FYI for all those that are just relying on the recording, which of course we welcome you to get the recording, but what you do miss out on is the ability to not only ask questions but hear the questions that are asked. So we stop the recording as once the presentation is complete, and that's just a way to get more attendance and more questions and more dialogue, because there's a lot of good input and feedback that we get from the people that are actually on the phone and listening to this live. So I appreciate everybody that has called in. So as Dustin mentioned, this is the 10th time we've done this study. We call it the 10th annual, but it's not quite annual. It is the 8th consecutive study we've done. And we also did it in 2005 and 2008, but it wasn't during the April or May timeframe, so you lose a little bit of the trendability. And so that's why all the data that we'll look at is the 2010 to 2017. Not all. I will actually show a couple interesting trends from when we started doing this 13 years ago in 2005. But the way we've executed this study has been consistent every year. That is, we're going to roughly 1,000 consumers. This year it was 1,010. Through a nationally representative panel, and we do weight the data by age and gender just because we see that there are some fairly significant differences by those two demographics. And for those of you that have worked on online surveys, you probably know that they're a great way to get quick, valid, and inexpensive data, but a couple of the shortcomings are that it underrepresents older women over 65, and it underrepresents younger men. Therefore, it's imperative that we weight back to that age gender profile. A couple definitions I'll set up. When we talk about FDMCD, that's our definition for the mass market, or what you generally think of as your Nielsen IRI universe with a few changes: food, drug, mass, club, and dollar, FDMCD. When we talk specialty brick and mortar, or sometimes just shorthand specialty, that is the non-mass market stores. So we're talking nutrition specialty like Vitamin Shop or GNC. We're talking natural food like Whole Foods or Sprouts or Trader Joe's. Catalog, as well as MLM, multi-level marketing, as well as some miscellaneous outlets such as gyms and military and chiropractors. Then we have the online universe, which is e-commerce divided by pure play retailers like Amazon or Swanson. They don't have a physical presence. Obviously, well, Amazon now has Whole Foods, but they're practically speaking still a pure play. When this study was done, I don't even think the deal had been announced when we did this in May. And then there are the brick and mortar operators, Walmart.com, Target.com, VitaminShop.com, etc. I'm going to talk quite a bit about a measure we call share of mentions, and I would also, when I talk about this, I would welcome you to go back. So I think the last 5 vitamin studies have been recorded and are posted online. You can get it on our resources page on tabsanalytics.com. And also you'll see in several of those studies where we've done a lot of validation work on this measure called share of mentions, which we use as a proxy measure for share of transactions, and then we can take that to help get us market share. So we found that share of mentions correlates very highly to the share of transactions that you would find in, say, household panel data. And so we can then, when we get to a market size, we then adjust those transactions by outlet by the transaction size. So obviously, well, not obviously, but I mean, for those of you not familiar with the category, the transaction sizes in the specialty outlets are much higher than mass market. So there's extra weight for each transaction that we can track through that channel. So as I said, the remarkably consistent questioning, and you'll see remarkably consistent responses over this time. We ask how many types of vitamins and nutritional supplements do they purchase? What types of products are they buying, both anytime and regularly, which we define as 3 or more times a year, and where do they buy vitamins and where do they buy them regularly? Again, 3 or more times a year. And so those are the questions we track since 2010 on an annual basis, and then we'll again see some of how that shifted even since 2005. So we first go to just overall category penetration, or what percent of adults 18 plus claim to buy the product at least once over the last year, and then what percent of them buy according to these, how they report on the number of types. So they buy 1 to 2 occasionally, they buy 1 to 2 regularly, which these two we would define as light buyers. They buy 3 to 5 types regularly, or 6 plus, 6 or more types regularly. So anybody buying 3 or more types we would consider a heavy buyer, and anybody buying 6 or more times we'd consider a very heavy buyer. So what do we know about this? Well, first of all, we hit a 10-year high on penetration, even if we go back, and we'll see, go back to 2005. That 78% is the highest we've seen. And you can see, except for this, this real big dip we found in 2012, and then a slight dip back in 2015, I mean, it's been a pretty consistent increase year over year as more people come into the category. And what we also see then is not only are more people coming in, but there's a higher level of commitment. So at least in this past year. So these are people that we would consider very marginal. Not only are they light buyers, but 1 to 2 occasionally. A high percentage is probably in actuality don't even buy the category even once. But so that dipped fairly significantly, and then the people that are committed or on a regular regimen buying 1 to 2 regularly, that went up quite a bit, 26 to 30%, and that's of all adults. Also, we saw meaningful gains in very heavy buyers. So while this doesn't look all that high on an absolute basis, that's a 14% increase, going from 7 to 8%. It may not stand the test of statistical significance, but what we see then as we dig into that increase is that those people are reporting that they're buying at a lot more outlets, and that really had some impact on the market share data that we'll see in a few more pages. As we further dig into the data, we then go back to 2005, so that's 13 years, or well, 12 years, I guess. So we see penetration overall go up 6 points from 72 to 78. The number of heavy buyers went up +2, but the number of very heavy buyers actually came down. So where we really see the increases in the percentage of light buyers, and you see that in percentage of committed light buyers from 21 up to 30. So as more light buyers, I mean, this is kind of what you would see, and you'll see lots more evidence of it as I come, go through the data, but it's evidence of a category that is becoming more mainstream. I've been working in this vitamin category since the late 90s, 1998, and for any of you on this call that were in the category then, that's kind of when it started getting, a bit more mainstream. Walmart started getting behind it in a big way, but even up to that point, it was the Wild West. I mean, it was crazy, retail deals and questionable claims and companies that, really didn't compete outside of vitamins. But now you have a lot of bigger companies in the category, you know, besides Bayer and Pfizer, you have Church and Dwight, you have Reckitt Benckiser, you have Nature's Bounty and Pharmavite that have become pretty big presences in the industry. So, you know, it's just it kind of paints an overall picture of what's happened in the category. Now, is this totally mainstream yet? I mean, the 78% is high, but if I compared it to, say, hair care or cough cold or you know, analgesics, I mean, you're getting penetration well over 90%. So it still has a way to go to get kind of, you know, really mainstream. And then also, this number is relatively low. This 24%, only really a quarter of adults are buying this on a lot of different types. You know, so it's still not this category that everybody's buying regularly. It's not like, again, hair care or analgesics, that type of thing. So, you know, we're looking at a category that still has some upside, quite a bit of upside as we get, you know, try and get more heavy buyers, more people in the category, but, you know, you expect that to, you know, keep more on a moderate pace. Now let's dig into some of the demographic splits, and one of the biggest ones is, you know, a lot more women are in the category than men. You can see 84 versus 71. And the big change this year, and because this was a pretty noteworthy finding, is we were seeing this consistent decline in the percent of women that were heavy buyers, meaning 3 or more types per year. Well, that reversed this year, and one of the big reasons, as we'll see in a couple slides on the types, is these the gender-specific multis really seem to have helped turn that around. Men, you can see a lower level of heavy usage as well. If we look at age, then we see kind of a flip of what we normally see. Now, older people, you know, have always been heavier buyers, and there's more of them buying, although that gap isn't nearly as big as the gap in the level of heavy buying. But this year, the gains were in younger buyers. Even, you know, your vaunted millennials, the 18 to 34s, saw an uptick in the level of heavy purchasing, whereas the older consumers actually dipped quite a bit. They're still the core target, but younger consumers are becoming more important. As we looked at income, and I really have never looked at income in any other vitamin studies, but it's really popped up to be hugely important in grocery and personal care, and I just did one on baby. We're seeing this really big differentiation of, you know, growth patterns based on income. So, but we don't really see that here. So, first of all, there's not the minimal differences in the absolute level of purchasing based on income, as well as heavy buying. It goes up slightly. You can see, you know, a noticeable dip on the, you know, the lowest income strata. I mean, what we would see in any other category we've been looking at is pretty sharp declines all the way even up to the 125 range, and then the 125 would have gone up quite a bit, and there would be a big level of differentiation. In fact, in baby, we saw that the 3 times higher percentage of people in the category at the high end versus the low end, versus, you know, lower than 50 grand. And what we can be reasonably sure of, though, is that income is not a big issue in explaining this category, and so, you know, that I won't belabor that anymore. Now we turn to the specific types. What are the types that have grown? Have we seen any meaningful shifts? Well, the most meaningful increase was something that we really haven't seen too much lately. In fact, there's been some bad PR on adult multis, bad studies, you know, studies about the efficacy have come out that weren't all that positive. Well, this year there was a pretty meaningful increase from 48 to 51, and that correlates very strongly with the gains we're seeing in the mass market behind a lot of the gender-specific and really gender age-specific multis. So women, older women, men, older men, and then even in the gummy form, that seems to have brought in some people to this type. And that's really the only place that we've seen any type of action for the types that we've asked about consistently. Fish oil, that used to be a solid #1 back in, you know, 2011, has been trending down pretty significantly over time, and it dipped again from 26 down to 24% of the people. buying. And then there was some calcium that actually is stabilized. You see the big 28% there. It was one of the larger types, and again, huge declines, and now it's stabilized in the 17, 18 range. But look at all some of these other types, vitamin B, vitamin D. So they had these really big increases at the earlier part of the decade, and then they've stabilized. So there's not more people coming in versus what we saw, say, 3 or 4 years ago. Probiotics had some big gains, and we still see these big gains in the market, but the number of people in the category hasn't gone up. We do see some gain in the people that say they buy them regularly. So that what that would suggest is the people that are in are buying a ton, a lot of purchase frequency. And it's a high price product, so they're getting traded up as well. You see child multi relatively flat, there's other minerals flat, fish, vitamin C flat. Let's look at some of the smaller types. So vitamin E also had a very interesting uptick here. If we look at from 7 to 9%, and what we attribute that to is some of the beauty-based benefits of vitamin E. So we see this real strong, beauty is one of the real healthy areas of consumer packaged goods, and particularly health and beauty care over the last couple of years. And so vitamin E seems to have benefited from a lot of those younger consumers, millennials, kind of coming in. That's the core target of beauty products. Melatonin also saw meaningful gains, so from below 7 to above 7. But hair, skin, and nail, we asked for the first time, they came in at 8%, which is on par with some of these others, so in multi. So it's a meaningful type that we didn't used to break out. And then brain supplements was only 2%, so that's like Prevagen, and I was expecting that to be significantly higher. And we asked the question, brain supplements such as Prevagen, we named 1 or 2 others. So what that means is, because it has a fairly big presence in mass market, suggests that there's a high frequency behind it and also very high pricing. But same story again, pretty much flat across all of these types, and that again is more evidence of a maturing market. There's not a type that's kind of really pushed this category forward, and we really haven't had that in the last 2 or 3 years. It's been an industry that's pretty much seen flat volume growth and just getting growing increases due to pricing. So now let's take a look at where people are buying vitamins, and the big winners are the mass market, food, drug, mass, club, and dollar, and online. So you can see online went from 7 to 13. So since 2010 has almost doubled its buyer base, and you see a big increase in mass market from 58 up to 68. And here's the specialty channel that's pretty much been stuck in the mud, 17 to 18%, while the other 2 formats are growing significantly. And before I move on, so, and this is meaningful, so the marginal buyers are coming in primarily through mass market. But we see on the heavy buyers this uptick across all channels. So if we look here at 3+ types, we see for mass market, we see even for the specialty channel, and we also see for e-commerce. So we have in the absolute a decent pickup in the number of heavy buyers, but really the bigger story is the fact that these people are reporting becoming more active across lots of different outlets. And that's not really anything we've seen before since we've been doing this study. So kind of a lot more channel migration. It's not switching, it's not shifting, it's just a lot more active purchasing across channels, and everybody benefits from that. Now let's take a broader view, go back to 2005, and we see mass market FDMCD, the good 9-point gain, 9 out of, so that's roughly a 15% increase in penetration. And then you add in the population growth, that's 20% or more people that are buying in that channel. Whereas specialty is actually down slightly. So you can see in e-commerce is up 9 to 13%. And now, interestingly, on e-commerce, the high water mark for the actual number of people buying was back in 2014, and we're very close to that this year, but you know, it's still not an absolute number, you know, so there's still, you know, a long way to go on people buying online. But clearly specialty has lost share, and actually a lot of share over that time. And so there's a lot of these estimates out there on how big the market, and it kind of pegs this market at, you know, much bigger than we're estimating at. I'm not going to relitigate that whole issue, but this has been a consistent number for the last 13 years, that less than 20 people, 20% of the people in the country say they buy even once in the non-mass market, non-online channels. And so they're just, it's mathematically almost impossible for that to be so big that it's 3 times more revenue than FDMCD. So as we then look at people, this then gets to the share of mentions, and as I told you, that they're not, even though there's not a big uptick in the number of buyers, or it's modest, the real big uptick was in the number of outlets that they reported making purchases. And so we have enough good data now to have a consistent trend in these transactions, share of transactions over the last 4 years. And so you can see that who's winning. Costco picked up quite a bit of share, but the real big winner is e-commerce on share of transactions. I mean, that's a massive increase, almost 5 points, 4.5 points. And for those of you that were on the webinar last year, you might recall me saying vitamins is the front line of e-commerce success in CPG. And there's a lot of evidence that maybe that message got through, or maybe I was just kind of seeing the same things in the data that a lot of e-commerce operators were, but certainly there's some indications of real success. And so the share decliners, who's lost share, CVS lost quite a bit of share, and that corroborates what we're seeing in their public statements just in general from their front end. The food channel seems to have lost quite a bit of share. Now, just because you're losing share doesn't mean you're losing sales. So remember, our projected transactions are up quite a bit, and I'll show you what those numbers are shortly. But you know, so they're pretty much flat year to year. Vitamin Shop had this weird anomaly. I think that the last year was more the outlier than this year, so I wouldn't exactly say they're in decline because it's higher than 2014 and 15. And then these miscellaneous outlets, not a lot going on there, not much going in gym or chiropractor, etc. So as I mentioned, the e-commerce surged due to an increase in the purchase among very heavy buyers. And it was really the brick and mortar sites, as we'll see, that gained the most. The declines where they were seen, and then Costco really has been kind of this steady growth engine over the last few years. So now as we look at e-commerce versus in pure play versus brick and mortar, and here's where if I had to have one headline of the study for this year, this is going to be the topic we'll talk about, is where are the e-commerce sales going? Everybody's obsessed with talking about Amazon, particularly after they bought Whole Foods and they just said they were going to, you know, look into meal kits, and everybody, what are they going to buy next? And it's just crazy. Well, the action is really in this category going on with brick and mortar. So this is share. Remember, it's just share, not total transactions. And so you can see from the prior 3 years, pure play was in the 75 to 80% of the total transactions. Walmart of this, you know, in particular, was pretty much a rounding error. They were, you know, no bigger than Vitamin World, for crying out loud. I mean, they just, you know, couldn't get it done. Look at this big growth now. That's almost 19 share points that brick and mortar picked up at the expense of pure play. But does that mean transactions went down with pure play? Repeat after me. The answer is no. No, it doesn't mean that at all. It means that there's a lot more transactions going on. So just work with me on this. I'm going to kind of walk you through this, because we don't actually, through the survey, have the exact number of transactions, of course. So we can, though, calibrate it to 2014. Let's say there were 1,000 e-commerce transactions, and you can see it laid out exactly like we see up here in the share. 797 for pure play, a little over 200 for brick and mortar. we projected that transactions actually came down the next 2 years, but the shares stayed relatively the same. The transaction sizes that we were tracking were going up. But look at this big gain here. So you can see in the blue, Pure Play actually went up quite a bit as well, from 641 to 782. So that's a big gain. But they lost 19 share points. And why'd they lose so much? Because brick and mortar almost tripled the number of reported transactions. So it was just a really big surge in the number of transactions going on there. And so we're going to take a similar analysis, but we're going to benchmark for per 1,000 Amazon transactions. So you see Amazon really versus 2014, which was the high water mark as far as users go and actual purchasers, they're only slightly above that, I mean, over the last 3 years. So they really haven't seen much growth. Puritan's Pride from our study has gone down quite a bit. VitaCost has pretty much stayed in place. Those are all Pure Play. Drugstore.com shuttered up. So they shut down and Walgreens rolled them up under the Walgreens.com. Look at Walmart here. 98, 177, 140, and this is, so basically this is, you know, they were 14% of the size of Amazon last year, about tripled in the number of reported transactions. And this corroborates not only our baby study of 2 months ago, where we saw a big increase in Walmart share, but it also corroborates their public statements on a big gain from their e-commerce. And we also have quite a few clients that are reporting really big growth as well. So everybody can obsess over Amazon and what are they doing, and you know, how big can they get, and are they going to take over the retail world? But the real action is Walmart, and not only Walmart, but brick and mortar in general. So we see this gain occurring across a lot of these platforms: Walmart, Vitamin Shoppe, CVS, Target, etc. The only one where we saw a decline actually was GNC. And again, that share decline, that's not all overall transaction decline. But here's this big share drop in Amazon. But as we know, their overall transactions went up quite a bit. It just didn't keep pace with the major growth that we saw. And so what was happening is these very heavy buyers were finding purchasing from these brick and mortar outlets. So they were going to a lot more outlets, and those outlets disproportionately were brick and mortar websites. So as you said, they almost all picked up share. And so now, as the press loves to say, who it's a horse race, who's going to win, whoa, who's going to settle on world domination? Well, Amazon's still a clear number one, but Walmart now has emerged as number two for its vitamin e-commerce with 9% share of the online transactions. Now, if we equate that to share of transactions of the overall market, Walmart.com still has a long way to go. They're only at 1.6% of the transactions. Amazon, much more meaningful at 4.5%, but they're both now registering as meaningful outlets that need to be watched. I mean, this last year, this Walmart.com, as I mentioned, they were at about a 0.3 or 0.4 something. You know, they aspired and barely made asterisk status last year, but now they have just burst onto the scene and led the way of brick and mortar shift overall. So we often talk then, you know, how big's this market? And as I mentioned, I'm not going to kind of get through the back and forth of why our estimate is more accurate than others. I think I did the last year, proved it quite conclusively that it's not a $40 billion market, it's $13 billion. And we're projecting this year will finish out at, you know, pretty strong level, 6%, which is much higher than it's been the last several years. And the meaningful part is that, well, two meaningful things. One is there's genuine volume growth in FDMCD. These growth numbers before were almost entirely pricing. So we're saying that it'll be split volume and pricing. We'll see specialty pretty much flat volume, losing share, may get a little bit back on pricing, and then this big surge from brick and mortar retailers. Now, one thing about these guys is that because they're selling primarily mainstream brands, at least Walmart, Target, you know, the drug guys, those transaction sizes and those price per bottle are much lower than what you see on, you know, you would typically see on a Amazon, where a lot of these specialty brands will pop up on your searches. So you don't get the full value of the increase in transaction size translated in when we look at a dollar share. So, but we're seeing that volume growth first time in the last 2.5 years, but on the flip side, the pricing increases have actually moderated. I think actually year to date that it's only up 1%. So we need to see the back half go up 3%, which may not happen. And then that would impact this 4%. Last year we called 3 and it came in, I think, right around 3. So but this exhibits all the characteristics of a mature category, meaning, you can kind of, particularly in brick and mortar, what's the growth going to be next year? What's it going to be in 2019? I mean, I'll just mail it in and say it's 3 or 4%, and it'll be that way for the foreseeable future. I mean, because it's going to be meaningful, meaning it won't be 0 or 1, because there's still consumers to be had, and there's still people that can be converted into heavier buyers, but the days of years where we saw in say 2012, 2013, where we were seeing consistent 8-9% growth rates, those days are gone unless there's some just massive technology new product that hits the market, and that has known to happen in this category. Just it hasn't happened in a while, so I wouldn't think that we'd expect to see that anytime soon. But what that does mean, though, this is just math now. So if this 20% persists, or high double-digit growth for e-commerce, and we're saying the market overall is going to stabilize in the 3 to 4% range, that by definition means that actual sales, much less sales share, will start coming from the brick and mortar. It hasn't happened yet, and in fact, looking at these trends, you say, hey, they're both able to grow. One doesn't have to come at the expense of the other, but that day will come, assuming this 20% keeps going at that pace. Now, that said, there's nothing that assures that will grow. I mean, I think everybody just takes the line and just keeps moving it on into the infinite future. But remember, in our study, and not only this study, but other sectors we've tracked, Amazon's been relatively flat in CPG. It has not grown all that much. And can brick and mortar keep the growth going, or was it a one-time surge and they'll stabilize at a higher level? That's the big question mark, but certainly they are much bigger presence to be reckoned with now. So let's summarize what we've seen both from the past year and the last 12 years since we've been doing this study. Sales appear to have lifted since the past year, coming off 2 years of flat growth. We see a resurgence of heavier buyers and more committed buyers, the 1 to 2 types buying regularly. And the heavy buyers came in 3 areas. So we had this meaningful gain in very heavy buyers, those that buy 6 or more types. You had a strong increase in the younger buyers, and reversal of a 5-year decline among women, heavy purchasing among women. So those 3 factors all translated into much more active purchasing. And that's kind of a side benefit as well. Women shop at many more outlets than do men. And so when you convert that woman to being a heavier buyer, there's more of a benefit than converting a man to be, with the same profile. And income had minimal explanatory power in this category, unlike some of the other sectors we've looked at. The largest type, adult multis, made a comeback, primarily as a function of gender-specific multis. And otherwise, we saw very stable purchase trends noted, the exceptions being meaningful decline in fish oil and vitamin E mounting a minor comeback due to beauty-related benefits from vitamin E, and younger buyers coming in and buying those products. First time entry for hair, skin, and nail got 8% of the adults. Brain supps only 2%. Very high dollars per bottle. Relatively high purchase frequency means that's still a meaningful type on a dollar basis. E-commerce really had dramatic growth behind the brick and mortar retailers, primarily Walmart. FDMCD also saw gains as there was an uptick in these heavy vitamin buyers shopping in the channel. We also saw the committed light buyers growing there. So who gained? Costco and the retailer website. Who lost? CVS and the food retailers lost share. Amazon grew transactions but had a massive share decline because it didn't keep pace with the growth in brick and mortar retailer, and you can't expect them to have done that. I mean, what we saw at brick and mortar was pretty much a tripling of the number of transactions. Longer term, mass market retail and online have picked up a significant share from specialty outlets, and that's really projected to continue. So where will the sales, I talked about, at some point the math says that sales have to start actually coming at the expense of some of these channels. We would project specialty outlets would be, bear the disproportionate amount of that brunt. The vitamin category is becoming much more mature, getting more mainstream, more stable, more predictable. Growth trends have been modest, excluding this recent surge, and that'll be interesting to see if that continues. No major new types have really seen sustained growth over the last several years. More contribution from lighter buyers, which always indicates stability or kind of maturation. And then channel shifting out of the specialty outlets. So it's kind of getting to more, the masses out there. And as I mentioned early on, vitamins is a bellwether of success in e-commerce for CPG. It has now close to 20% share of transactions. Pure play is now only 60% of the transactions. And if this is really to become a viable channel, you need to see brick and mortar even push their share even beyond 40. Penetration has doubled since 2010. And really the sales somewhat flattened out at the expense of brick and mortar, which really have surged. And importantly, it hasn't come at the expense of brick and mortar, at least not yet. And actually, nothing we've ever tracked in any sector has growth in e-commerce come at the expense of brick and mortar. They can and do grow concurrently, not only in this sector, but of others. So what I mentioned earlier was it'll be interesting to track, and so I wanted to make everybody aware of a new service that we're launching. Basically, we're going to be tracking these outlets, all channels on a quarterly basis with a very similar methodology, but the difference is you will have access to the data with an online Tableau-based interface where each one of these, this is just a visual here, so it's not live, but you'll be able to click on, say, women and see how their outlet purchasing changes, and you'll be able to see what's the difference, how does dollar share by outlet change among each of these demographics, and it'll be something we'll track on a quarterly basis. We'll also be segmenting the overall category into these buyer groups, light, medium, heavy, and extreme, we call it. And here's an example in another category where you can see how the share differs dramatically for each of these buyer groups. So for example, look at CVS in this category. Their share among these extreme buyers is 14, and it's only, it's less than half that. And for the other groups, now these extreme buyers are really interesting, and we can derive that from either panel or survey data. They're about 4 or 5% of the category buyers, and they're doing 20 and sometimes 25% of the overall sales. So they're just these hardcore maniacs. They're practically shopaholics. They're buying this stuff so much, and each category has them. And so we'll be able to track that on an ongoing basis. And it has really major implications because we'll be asking, why they chose to buy at certain outlets. A lot of times this is promotionally driven. A lot of times it's innovation driven. So we'll be able to understand why. And that can structure your particular strategies. We'll also be putting in brand information. So here's something we did from our cosmetic study last year where we asked about awareness, we asked about favorability, again by key demographic. We've got to share of mentions, so we can do it by brand as well. And so you can see, say, Clinique or some of these outlets or brands in these specialty outlets that you can't track. That will be picked up in this study as well. So just some background on it. We'll be tracking vitamins and sports nutrition. We'll be doing it 4 times a year on a quarterly, regular basis. There's going to be 30 brands per category listed that consumers will respond to, whether they're aware of it, do they buy it, are they favorable to it. We'll also ask information about specific segments and types that you can track, and then specific outlets. We are limiting this to 5 manufacturer participants per category because this will give you a competitive advantage with retail customers, and you'll also have this comparative advantage you can use for your internal planning as well. I mean, this is something, it's why this study was started, was because there were such questions about how big is that world we can't see on the multi-level marketing and the e-commerce and the vitamin shops of the world. Well, this will give you not only visibility once, it'll give that to you on an ongoing basis. So with that, again, I appreciate everybody sitting in again and for your attention, and I'm going to kick it back to Dustin, and we'll open it up for questions.